Our market monitor tonight is a classic stock picker who likes companies he said are misunderstood by the market. He is David Marcus, Chief Investment Officer and CEO at Evermore Global Advisors. It's his first time joining us on the program. It's good to see you, David. Thanks so much for coming in, especially on a long holiday weekend. We appreciate it.
Sure.
You say that you are buying crisis. You never sell crisis. So tell me why.
Well, I think that when there's a crisis, investors generally go into panic mode and they start selling without really thinking about it. They don't care what price they get, they just want to get out. And we think that's when you get your best opportunities. So my view is when they're dumping them, I want to be buying them. It doesn't mean I'm backing up the truck and buying everything in sight. You still have to be smart about it, do your homework, understand what you're buying, but the key is we really would like to think of this as what I would call a nibbler's market.
I was just going to say, that's how you describe it, a nibbler's market.
Yeah, you nibble, you take a small bite, because for example, a day like today, it's a bad day out there.
Right.
You take a small bite, you still have resources to come back on another bad day. If we gobble, we might use up all of our resources. So the key is to take small bites, but always take advantage of these bad days and not freak out, not panic, and just relax. The headlines are much worse than the reality.
Yeah, and stick with your plan. Hopefully you have a plan.
Absolutely.
I know you have a plan, but I'm hoping investors do. So you say that you have been buying. So let's take a look at some of your picks for us. Voya Financial, retirement and annuities. What is it that you like about Voya?
So Voya was spun out of ING Bank, the big Dutch bank, a few years ago when they were going through their crisis. And so Voya, 70% of it is retirement accounts. The other 30% is annuities and mutual funds. It's just sort of a mispriced company, extremely well run. It's only been a public company for 2 years. And so I think investors are still getting to know it. But you have a wonderful, it's what we would call an annuity-like business, because these 401k programs stay there forever. And so it just cranks out cash flow over and over and over. So it's a cheap stock. We have excellent management running it. And I think investors are really just learning about this company now. It's very undervalued.
Kind of an undiscovered gem in your portfolio.
It really is.
WP Glimcher, did I say that correctly? Right. This is a REIT.
That's right. So this is a company that owns 121 retail shopping centers in the United States. Over half of them are enclosed malls, and the rest are strip malls and open-air malls. But this is a company that really is below the radar. It's a $2.5 billion market cap. And part of it was spun out of Simon Properties about a year ago, which is the biggest mall operator in the United States. And then that company, Washington Prime, acquired Glimcher. So it's now called WP Glimcher. And investors just don't understand it. When it first merged or did the acquisition, the stock was 20. Today it's 11.5. You're getting just under a 9% dividend yield. It's extremely undervalued.
Let's go on to your last one, which is very quickly, which is ING, which spun off Voya. So you still like ING?
Yes, we like it a lot. So this was bailed out by the Dutch government a number of years ago, and everybody hated it because the goal was to go back to its roots in traditional banking. Well, the newsflash is traditional banking can be highly profitable. So as they sold the non-core assets going back to their roots, profits grew. They were selling things like Voya and some other businesses. And slowly investors are waking up to the value. And it pays a tiny dividend today, but that's going to grow as the business continues to improve. And it also will participate in the growth of Europe, where we spend a lot of our time as well.
That's right. You like Europe a lot.
Love it.
David, we have to leave it there. Thank you so much. You've had a very good year, so good luck.
Thank you very much.
Appreciate it. David Marcus with Evermore Global Advisors.